This week on the Retirement Quick Tips podcast, I'm recapping the third quarter of 2024 in the markets and the economy and looking ahead to the end of the year. Today, I'm talking about the current economic climate and what's driving the economy now. Now, it has been a pretty confusing year for a lot of reasons. You have a pretty weak housing market, just houses not moving, not a lot of supply, not a lot of sales. But prices have been pretty stable, and it's because there's a supply and demand match. A lot of people aren't selling and a lot of buyers aren't buying because of that sort of deadlock. You don't have these huge drops in prices that you might otherwise expect in this environment where housing has just gone up tremendously in the last few years, and rates are now pretty high, making housing unaffordable. So that is obviously a huge problem, but it's not a problem that's impacting the economy right now. You also have manufacturing that has been very weak for quite a while now. And obviously the higher interest rate environment that we find ourselves in trickles through everything. It impacts businesses because businesses, especially those that rely on debt, which are quite a few, it's a lot more expensive to get a loan. It's harder to get a loan. And gone are the days where businesses could get a loan at prime at like 3-4%. It's more like, yeah, you can still get a loan, but it's going to be at 10 or 12 or 15%. So that has changed. You look at high interest rates impacting, obviously, I mentioned housing. It also impacts car buying. You're trying to get an auto loan. If you have credit card debt, if you have student loans, all of these debts are adding up. It's obviously problematic, and it's why a lot of Americans, I think I saw a statistic, I should actually look this up before I just repeat something without verifying, but half of Americans, if you poll them right now, they would say that they feel like the economy is in a recession. And that makes sense because even though it's technically not, you have a lot of Americans who haven't had any real wage growth because of inflation. Things continue to kind of get worse. Like gas prices are down, but your auto insurance and your homeowner's insurance is way up. There's just been pockets of inflation that continue to drag down the consumer and consumer spending. However, that's kind of an interesting segue into what has been a very resilient economy so far. So the economy has some momentum in the positive direction overall. And you can see that when you look at the GDP numbers and things like that. Consumer spending even has still been relatively stable and contributing well to the economy. So that's been pretty resilient. And you look at certain drivers of the economy, like business investment and inventories, that all looks pretty stable. A big indicator for the economy and the health, and at least where it is at the moment, is the labor market. And the unemployment rate has ticked up some, but it's still pretty low and it's kind of a moving target. You haven't seen massive layoffs. You haven't seen the jobless claims spike up. You've seen little spikes, but nothing that would indicate that we are on the precipice of a recession. What you have seen that has impacted the average American is you've had slower wage growth. So that's actually a good sign for the economy. If you and I are not out there demanding higher wages, that's actually going to help the inflation continue to cool. So obviously, slow wage growth is not good, but when you're in an inflationary environment, it does help to kind of bring inflation back down and won't lead to continued pressure on inflation. So long term, that should probably be a good thing. And I guess speaking of inflation, it is going back down. However, you look cumulatively at prices, and part of the reason why Americans are so pessimistic is because we had just tremendous inflation. And so you rewind 5 years and everything is way more expensive than it used to be. Even though inflation is moving back down and has been for over a year now. I mean, inflation really started to take a big decline and dropped, it was 9% for a while. Then it was like 6% early 2023. And it's gone down since then. It has been stubbornly high, higher than the Fed's 2% target, but it is moving in the right direction. So I mentioned earlier, I made a bet with my dad earlier. I think it was the end of last year. $5 bet. I thought it was a sure thing, easy money. The US economy would go into a recession this year. And the bottom line is it doesn't look like that's going to happen. It looks like I'm going to lose that bet. Sure, you could have some external shocks. There's always reasons to be concerned when you look at the world and the uncertainty that's out there. But when you're just evaluating the direction of the economy, where the labor market is, the fact that inflation is still coming down, it looks like the economy will at least avoid a recession, hopefully, in 2024. And I'm definitely going to lose that bet. All right, that's it for today. Thank you so much for listening. My name is Ashley Michike, and this is the Retirement Quick Tips Podcast.